Hey, welcome back to the channel. So what we're going to go over today is what happens to mortgage rates during a recession. How does a recession and housing and all of those things affect rates? And we're going to talk about current market, future market, and we're going to go back to the past 5 recessions and see what exactly goes into this and what to expect next. So housing is one of the first factors to slow down an economy. But it's also one of the first factors to help the economy rebound because it's such a big piece of the pie when you're looking at all the factors to inflation and goods and rents and cars and used cars and everything that's all calculated into one. So over the past 5 recessions, going back to 1980, rates have decreased in the recessions over the past 5 have decreased over 1.8%. which at our current rate right now, we're about 6.99%, which would put us just over 5% when this actually occurs. So we're expecting this from all the experts that are saying, we're expecting rates to start falling, let's say third or fourth quarter of this year of 2023, which if it drops that 1.8% like it has in all the past 5 recessions, that's going to put us somewhere around 5 to 5.25% from where we're sitting right now. So talk about getting the mortgage market kicked back up. Everybody's going to jump back into the market because that's going to lower monthly payments from 6.99 rate down to a 5.25 rate. That's going to lower payments on an average home like $500,000-$600,000. That's going to lower, a monthly payment anywhere from $500 to $700. Just with that rate drop right there. So I think a lot of people are going to get back into the market and see what happens with that. Many are optimistic over a 3-year term. I don't think it's going to take that long. All of the experts, Barry Abib thinks it's going to happen later this year or the third quarter of this year, where these rates are going to start dropping because the Fed, when they met earlier this month, they just paused rate hikes. And they did say they may do a couple rate hikes in the future of this year, but I think they're waiting to see what inflation does, what the numbers come out. And we're expecting inflation numbers to drop anywhere from 3.5 to 3.7 here in the next couple months, maybe in the later part of August going into September. But the recession is almost 100% guaranteed. All of the signs are there. So everybody's planning on a recession happening. So this could be good news for mortgage rates and people out shopping, or just people, those that are pre-approved, waiting on the sidelines to go buy a house. But don't wait too long because you don't want rates to drop and then everybody jumps back into the market at the same time. So you want to kind of time it a little bit sooner than when everybody else jumps back in the market. Because keep in mind, even though you're buying that house, you're still getting a good deal on it right now. But when those rates drop, those house prices are going to start raising up. So you want to hurry and make a decision better sooner than later, because you can always refi this in 6 months. I mean, that's minimal. It may cost you a few $1,000s over the next 6 months to make that bigger mortgage payment, but think about that deal you're getting. I just wrote up a deal 2 weeks ago where this house was selling last year for $740,000, new construction, 3,400 square foot house. And the buyer picked it up for $595. I mean, that's huge. That's over $150,000 uptick from what it was selling for 6 to 8 months ago. So, and I've seen all year long, I've been seeing those where people are saving anywhere from $80,000, $100,000, $110,000 on everything that they're buying right now. So don't wait too long. All the signs are there. Rates are going to be coming down third, fourth quarter of this year. So just be ready to go. Hit us up if you want to get pre-approved. And don't forget to subscribe to the channel. Hit that like button. And you can reach us anytime, 24/7, 801-604-4949, UtahLowRate.com. And we'll see you on the next one. See you guys.